Charlie Munger built decades of wealth with unmatched discipline. He rarely trusted anyone with his money, not even hedge fund managers, Wall Street stars, or billionaires. He often said most were better at collecting fees than creating lasting value. But there was one exception to all of this: Li Lu. His story is about a man who overcame impossible odds to earn Munger's trust, rising from hardship to become one of the world's most respected investors. Munger even called him the future of Berkshire Hathaway. To understand why Munger believed in him so deeply, we must go back to the beginning, to Li Lu's childhood in Tangshan, China. Li Lu was born in 1966, a year that marked the start of the Cultural Revolution. China at that time was not a place of stability or peace. It was a country torn apart by political campaigns, where families were uprooted, traditions were attacked, and millions of people were caught in endless waves of struggle sessions and persecution. For a child, it meant growing up in a storm. Li Lu's own childhood was shaped by loss. He became an orphan at a young age, left without the safety of parents to guide him. Instead, he was moved from one foster home to another, forcing him to learn quickly that if he was going to survive, he would have to depend on himself. But this was easier said than done, as survival in those days was not easy. Though Tangshan was an industrial city, it was not a place of wealth. Like millions of Chinese families during that time, life meant shortages of food, a lack of opportunities, and constant uncertainty. For Li Lu, it meant taking on hard labor early. As a teenager, he worked in factories to make ends meet. This was not part-time work for pocket money. It was physical labor, often grueling, often unsafe, and far from the carefree life many imagine for someone his age. These years planted in him the resilience that would mark his later life. After all, when you spend your youth working to survive, you develop a toughness that stays with you forever. However, hardship alone does not explain what made him different. Many lived through the same conditions. The difference was that Li Lu developed clarity. He could see early on how fragile life was, how quickly things could change, and how systems built on control could damage entire generations. He grew up not only tough, but thoughtful. That ability to look beyond the immediate, to see the bigger picture of how societies and people behave, became the foundation of his worldview. By the time he was old enough for university, China was beginning to open slightly. The late 1970s and 1980s brought reform policies under Deng Xiaoping. Universities, once shut down, began admitting new students. Li Lu earned his way into Nanjing University to study physics. For many, this would have been the safe path, a chance at a respected career. But the China of the 1980s was a place of both hope and frustration. The younger generation, having seen the damage of the Cultural Revolution, wanted more openness, more freedom, and a chance at a better system. On campuses across the country, debates about reform and democracy started to grow. Li Lu was right in the middle of this atmosphere. His transfer to Beijing placed him at the very center of intellectual and political life in China. Beijing universities were buzzing with discussions about corruption, inequality, and the need for change. Li Lu began to get more involved. He was no longer just a student of physics, he was becoming a student of society. And this set the stage for the events of 1989, the Tiananmen Square protests, which would change his life forever. In the spring of 1989, students gathered in Beijing to call for reform. What started as a movement about corruption and transparency grew into something larger. Tens of thousands of young people filled Tiananmen Square, demanding political change. Li Lu emerged as one of the student leaders. He was not the loudest voice, but he was one of the most organized. He took on roles that mattered: planning, negotiating, and giving speeches. At just 23 years old, he found himself at the heart of one of the most important moments in modern Chinese history.
From Tiananmen Square, the sound of gunfire sounded like a battle, but it was one-sided. The air was filled with shouts of "Fascists! Stop killing!"
But as we know, the movement ended in tragedy after the government cracked down on the protests in June 1989. The world watched as troops and tanks entered the square to massacre those who wanted to be heard. For the students who had led the movement, the risk was deadly. Li Lu was placed on the most wanted list of student leaders, which meant that for him, staying in China was not an option. If he had remained, he almost certainly would have been arrested, if not worse. His only real choice was to flee, and so with the help of human rights groups and international networks, Li Lu managed to escape, eventually finding his way to the United States. When you now look at it from a bird's-eye view, you realize that this escape was more than a change of location. It was a complete break from his past. He was no longer a student activist in China. He was now an exile in a foreign land, cut off from home, family, and the language he grew up with. He arrived in America with almost nothing. He barely spoke English, had no money, no support, and no ready-made path forward. For many, this would have been the end of the story, but for Li Lu, it was just the beginning. The United States in the early 1990s was a world apart from the one he left. For someone who had lived through the Cultural Revolution, worked in factories, and marched in Tiananmen, it must have felt overwhelming to suddenly stand in New York, surrounded by skyscrapers and opportunities. But Li Lu had one advantage that many immigrants lacked. He had resilience. He had faced loss, poverty, and exile, and he had survived. Now, in America, he was determined to rebuild, and so he set his sights on education. Despite the language barrier and his lack of resources, he won scholarships and secured a place at Columbia University. There, he did something extraordinary. He did not settle for one degree. He pursued 3: economics, law, and business. Each of these paths on its own is difficult. Together, they demand relentless work. Yet despite these impossible odds, Li Lu thrived. He studied late into the night, driven by the knowledge that education was his way forward. He was not content with just learning facts. He wanted to understand how the world worked, how economies moved, how laws shaped behavior, and how businesses created value. It was at Columbia that he first encountered the ideas that would guide his career. Columbia had a special place in the history of investing. It was where Benjamin Graham had taught. It was where Warren Buffett had studied. And it was where the philosophy of value investing had taken root. Li Lu read Graham's work. He studied Buffett's lectures. He listened closely to professors who emphasized discipline, patience, and the idea that investing was not gambling, but a rational search for value. For someone who had lived through uncertainty and chaos, these ideas must have felt natural. He understood instinctively the importance of patience, of avoiding reckless risks, of thinking long-term. With his degrees in hand, Li Lu did not rest on his academic success. He turned his focus to a field where his resilience and clear thinking could shine: investing. By the time he finished his studies, Li Lu was no longer just a survivor or an exile. He was a man with a philosophy. He saw investing not as a way to get rich quickly, but as a way to build stability and security. He saw it as an extension of the lessons he had learned in life: endure hardship, stay rational, and focus on what lasts. He was now ready to step into the world of finance, not as a follower, but as someone ready to make his own mark. When Li Lu finished his studies at Columbia, he had choices that could have taken him in many directions. With a background in law, economics, and business, he could have gone into politics, corporate law, or the academic world. But he was drawn towards something else. The world of investing offered him not only the chance to make a living, but also the chance to practice the discipline he had come to admire. He saw investing as a way to test ideas against reality, where patience and rational thinking were rewarded over time. Unlike politics, where speeches and appearances mattered most, or law, where outcomes could depend on loopholes, investing had a clarity he valued. Either a business produced results, or it did not. Either your judgment proved right, or it did not. In 1997, Li Lu founded Himalaya Capital. The name itself spoke to his roots and his vision. The Himalayas are mountains that stand firm against time and storms, and this was how he wanted his fund to operate. Himalaya Capital focused on value investing, the same philosophy pioneered by Benjamin Graham and carried forward by Warren Buffett and Charlie Munger. This meant searching for undervalued businesses that had durable advantages and that could compound wealth over long periods. Li Lu understood that to succeed, he needed patience. Unlike most hedge fund managers, who promised quick results to attract investors, he did not chase after every opportunity. He waited for the right ones. What gave him an even sharper edge was his unique position. He understood both China and the United States at a deep level. Most Western investors in the 1990s and early 2000s knew little about Chinese companies. Many were hesitant to even touch them, thinking of China as too opaque or risky. But Li Lu could read the reports, follow the culture, and understand the business climate better than most outsiders. He also understood American markets and expectations. This gave him a rare advantage. He could see value where others only saw confusion. During these early years, Himalaya Capital built a reputation quietly. It was not the type of fund that made headlines with flashy bets or wild predictions. It was known among those who paid attention as a disciplined, serious operation that produced strong returns without unnecessary risk. Li Lu himself avoided the spotlight. Unlike many hedge fund managers who loved the media attention, he stayed in the background, letting the results speak for themselves. But what set him apart was not just his performance, it was his integrity. Investors who met him were struck by his seriousness. He was not interested in short-term games. He carried himself with the same resilience he had developed as a young man, working in factories, and as a student leader in Tiananmen Square. He had lived through enough chaos to know that shortcuts always carried hidden costs. That character made him stand out in a field often filled with people chasing fast money. It was only a matter of time before someone like Charlie Munger noticed. Munger, the longtime partner of Warren Buffett at Berkshire Hathaway, was not the type to be impressed easily. He had spent decades studying people, and his view of the investment industry was not kind. Even his longtime partner Warren Buffett agreed with him, at one point saying that money spent on plumbers is better than on hedge funds. Munger himself never hired outside managers for his personal wealth. He believed he and Buffett had already created the best system through Berkshire, and outside of that, he kept his money close. But when he came across Li Lu, something was different. Munger recognized not just the results, but the character behind them. He often said that investing was not only about intelligence. Many people were smart. What mattered was temperament. Could you stay rational when everyone else was losing their heads? Could you avoid greed when money was dangling in front of you? Could you stay patient when the world rewarded impatience? Munger saw those qualities in Li Lu. The story of how Munger discovered him is not as dramatic as the escape from China, but it is just as important. Li Lu had built connections in investment circles, and through those circles, Munger came to know his work. It did not take long for Munger to form an opinion. He was impressed not only by Li Lu's deep understanding of value investing, but also by his grasp of China, a country that Munger himself had a keen interest in. Munger had long believed that China's economic rise would shape the future, and here was someone who had both the cultural background and the investment discipline to navigate it better than anyone else. The respect and the potential he saw were so immense that Munger once described Li Lu as the Chinese Warren Buffett. That was not a phrase he used lightly. It was his way of signaling that Li Lu had both the brilliance and the character to succeed at the highest level. Munger was especially struck by the fact that Li Lu had survived so much, yet remained calm, rational, and ethical. In an industry filled with big egos, Li Lu carried no arrogance. In an industry obsessed with quick returns, Li Lu was patient. For Munger, this was enough to do something he had never done before. He entrusted a large portion of his personal family fortune to Li Lu's Himalaya capital. This was not a symbolic move. This was real money. Money that Munger could have managed himself, but chose instead to place in the hands of someone he trusted. It was an unprecedented step. For all his long life, until his passing in November 2023, Charlie Munger had only ever given this kind of trust to one person, and that was Li Lu. The decision speaks volumes about their relationship. Munger was a man who had worked side by side with Warren Buffett, who had seen the very best and the very worst of the financial world. For him to hand over his personal wealth to another manager was a statement of complete confidence. He once said of Li Lu that he was highly ethical and very brilliant. But behind those words was an even stronger message: trust. It is worth pausing to think about what that meant. Trust in investing is rare. Money managers often make promises, but few deliver consistently over decades. Many chase fads or bend the rules. For someone like Munger, who valued honesty and clear thinking above all else, there was rarely anyone worth trusting. But in Li Lu, he found not only skill, but also a mirror of his own values: rationality, patience, simplicity, integrity. This trust also had ripple effects. When Munger endorsed someone, people paid attention. Investors who had never heard of Li Lu began to take notice. Himalaya Capital, which had operated quietly for years, gained a global reputation. Li Lu himself, though still modest and private, became seen as one of the greats. Not because he chased that status, but because the man who had spent his life avoiding hedge fund managers had chosen him. For Li Lu, having Munger's trust was more than a vote of confidence. It was a validation of the path he had chosen. At this point, it's worth looking more closely at what makes Li Lu's investment philosophy so compelling. Because it's not only his story that matters, it's also the way he thinks about investing, the way he practices it, and the results it continues to produce. Munger trusted him not only because of his character, but also because of his method, and that method deserves a closer look. The way Li Lu invests looks simple on the surface. It is built on a few steady ideas that do not change with the news cycle. He hunts for good businesses at fair prices. He stays inside his circle of competence, doing deep work before making any decisions. He keeps risk low by avoiding debt and fragile models. Then he sits still. He looks for moats he can explain in plain words. He wants leaders who care about products, costs, and customers more than headlines. He studies the industry from the ground up, not from a screen. When he finds the right fit, he thinks in years and decades, not quarters. He would rather watch and wait than force a trade. He sees cash as a tool for patience, not a burden that must always be put to work. He accepts boredom when the right pitch is not coming. This habit keeps mistakes small and wins durable. His checklist also has a human side. He grills every business with tough questions, from what could kill it to whether its leaders are honest and able. He checks if the unit economics hold up through a bad cycle. He even sees if the culture drives people to fix problems fast. If the answer is no at any step, he moves on. If the answer is yes at every step, he still keeps a margin of safety. Numbers matter, but only after the hard questions about behavior, cost structure, and competitive pressure. In his view, a stock is a claim on future cash that comes from real work. That view is calm and strict at the same time. It leaves no room for stories that sound good and break under stress. He also builds concentration on purpose. A wide basket can hide weak ideas and slow the mind. A focused basket forces care. It tightens research. It keeps the standard high. That does not mean reckless bets. It means a few well-understood businesses where time and compounding can do most of the heavy lifting. The aim is not to be busy. The aim is to be right when it matters and quiet when it does not. Overall, Li Lu's investment philosophy is rooted in patience, process, and a deep understanding of how businesses learn and adapt. He doesn't chase headlines or the next hot sector. He studies systems, people, and incentives. He looks for companies that can improve faster than competitors, that can iterate on products, and that can scale without sacrificing quality. This way of thinking guided him to BYD, one of his biggest successes so far. Li Lu didn't just invest in BYD, he decoded it. Before electric vehicles were on magazine covers and battery tech became a buzzword, Li Lu was already deep inside the machine, studying supply chains, walking factory floors, and dissecting chemistry sheets with the precision of a surgeon. BYD wasn't a darling of Wall Street. It was a gritty battery manufacturer trying to build cars in a crowded Chinese market. But Li Lu saw something others missed. He saw Wang Chuanfu, a founder who wasn't chasing headlines, but chasing efficiency, a man who could break down a car and rebuild it from scratch, cheaper and better. Li Lu saw vertical integration not as a risk, but as a fortress. He understood that BYD's control over its components, from batteries to semiconductors, wasn't just smart, it was revolutionary. Armed with knowledge, he didn't rush in. He watched and he listened. He asked questions no one else was asking. And when the picture was clear, he moved with quiet conviction. Himalaya Capital took a position, not a speculative punt, but a long-term stake built on deep research and absolute clarity. Then came the ripple effect. Li Lu brought the idea to Charlie Munger, not with fanfare, but with facts. Munger, famously hard to impress, saw the same discipline and foresight that had guided Berkshire Hathaway for decades. And when Munger was convinced, he took it to Warren Buffett. In 2008, Berkshire Hathaway invested $232 million for a 10% stake in BYD. That stake ballooned to over $8 billion, one of Berkshire's most successful investments ever. And it started with Li Lu's quiet brilliance. His own returns were even more staggering. Early estimates suggest a gain of over 5,600%. But the real story isn't the number, it's the method. Li Lu didn't follow the crowd. He built his own map. He understood the arc of innovation, the rhythm of execution, and the power of patience. Just so that we are clear, BYD has faced turbulence, and it did not turn into an overnight success. It has faced regulatory shifts, global competition, and supply chain pressure. But Li Lu had already factored that in when he took the plunge. He knew that great companies don't sprint, they endure. He held through the noise, through the doubt, through the cycles. No hedging, no trimming, just conviction. And as BYD scaled into one of the world's largest EV and battery manufacturers, the thesis held. The company kept innovating, kept cutting costs, kept expanding. In 2024, it posted record revenue. In early 2025, it delivered strong profits before a midsummer slowdown. That wasn't a stumble, it was part of the rhythm. To this day, BYD remains a cornerstone of Himalaya Capital's portfolio, and Li Lu's process, his discipline, his clarity, his refusal to be rushed, has become a blueprint for what long-term investing should look like. This wasn't luck, it was mastery. Even with his discipline, though, not every position goes as planned, because no investor, no matter how skilled, can see everything. But Li Lu's strength lies in how he builds in room for error. His process doesn't chase perfection. It focuses on survival, resilience, and long-term wins that more than cover the occasional miss. Himalaya Capital reflects the same philosophy. The fund is disciplined, research-driven, and focused on long-term outcomes. As of March 2025, it managed roughly $17.2 billion, concentrated on a few carefully selected holdings. Himalaya functions more like a research lab than a trading floor, with fees tied to long-term results. The culture prioritizes thinking over reacting. Li Lu treats investor capital as a responsibility, balancing competence with honesty and prioritizing the avoidance of permanent loss. He admits when these aren't working and resists short-term fads. This approach extends beyond numbers. Li Lu views investing as a moral exercise as much as a financial one. He emphasizes the duty to manage other people's money with care. Li Lu's broader impact goes beyond the numbers. He has helped bridge understanding between Western investors and Chinese markets, showing that deep knowledge and ethical behavior can coexist with high returns. His approach has inspired a generation of investors who study his work the way previous generations studied Buffett. Charlie Munger's trust in him underscores that Li Lu is not only skilled at picking opportunities, but also embodies the values that define sustainable investing: patience, rationality, and integrity. But winning simply isn't enough. And the big question, why did Charlie Munger trust only him with personal funds when many managers had good records? Part of the answer is skill. Part of it is temperament. The largest part is character. Munger looked for someone who would handle his money the way he handled his own. He looked for someone who would not chase the fashion of the month. He looked for someone who would sit still when prices moved and act only when the odds were in favor. He saw that in Li Lu. He saw a person who had survived real tests, who had learned to weigh risk with care, and who had no need to impress strangers. He also saw shared principles. Both believed that a small set of clear rules, followed every day, beats clever tricks that work until they do not. Publicly and privately, Munger praised his mind and his ethics. He held him up as a model for what an investor should be. The choice to invest with him was not a small nod. It was a rare act in a lifetime of caution. Trust also requires proof over time. Himalaya's work gave that proof. Years of patient holding, careful risk control, and candid updates built a record that spoke for itself. The BYD outcome made the headlines. But the deeper thing was the process that led to it. The same process shaped other long holdings across Asia and North America. The firm did not swing often, but it swung hard when the setup was right. It did not hide behind layers of jargon or exotic trades. It did the plain work of finding good businesses, paying a fair price, and letting time compound the gain. Munger also liked that Li Lu never confused access with insight. He did fieldwork and data work, and only then cared about access. He did not trade on whispers or try to get cute with short-term moves. He knew that the best edge is a long view held with conviction. It is hard to copy, and it cannot be hired easily. Only a small set of people will live that way when real money is on the line. That is why the trust was so rare. The impact of all this work reaches far beyond one family's portfolio. It has shaped how Western funds look at the Chinese industry. It has given a case study in cross-border investing done with care. It has changed how many think about electric mobility, supply chains, and the way vertical integration can be a strength when run by operators who sweat details. It has also given a living lesson in trust. Trust is not built by charm. It is built by years of choices that line up with words. It is kept by telling the truth when a thesis is wrong, and by keeping standards high when a thesis is right. That is the pattern on display here. There is also a lesson about size and humility. As assets grew, Himalaya did not grow noisy. It did not launch a dozen side funds or chase attention. It stayed focused, kept headcount lean, and let the craft speak. Form ADV filings show assets of around $17.2 billion as of early 2025, a scale that would tempt many to get loose. The discipline did not slip. That restraint is part of why the trust was held, and part of why the record has stayed intact. This is the heart of why Munger chose only him. Skill without judgment is a risk. Judgment without ethics is a trap. Ethics without results is not enough. He found all three in one person. He saw a record born of patience, a mind that could dig deep and stay calm, and a person who would rather be right than noticed. That mix is scarce. It is also the right mix for anyone trusted with family money that took a lifetime to earn. Munger guarded that money with care. Handing a large piece of it to another manager was not a small call. He made it once. At the end of it all, Li Lu's journey is not just the story of an investor. It is the story of resilience and clarity of purpose. From the rubble of Tangshan to managing billions with Himalaya Capital, his life has been shaped by struggle, discipline, and vision. That path is exactly what made Charlie Munger see him as different. And honestly, the fact that Charlie trusted him when he trusted no one else says more than any track record ever could. It was an acknowledgement that Li Lu is not only a great investor, but also a man of principle, a rare figure in a world often driven by greed and noise. And that is the legacy of Li Lu. He is not remembered simply for picking stocks or growing assets under management. He is remembered for showing that character and intellect, patience and discipline can still define greatness. His life is proof that investing, at its best, is not just about money. It is about values, trust, and building something that lasts.